Hello and welcome to the For the Property Investor podcast, here again with the weekly news, thankfully brought to us by Nick Bendel. Welcome, Nick, again.
Thank you for having me, Owen. I love our weekly chats.
Yes, every Monday morning we get together and I'm sure people listen to us at other times during the week, but it's our Monday morning ritual. So thank you for joining me again.
Every other morning of the week, it just doesn't feel the same without you.
Oh, thanks, Nick. Well, actually, that sounds a bit weird. So, yeah. Uh, let's move on. What's your week been like?
Well, my week, and for those who don't know, I'm the owner of a business called Hunter and Scribe, which is a copywriting agency that writes content for finance and property professionals. And over the course of last week, we helped a mortgage broker with two different award submissions. It was the same award program, but we helped him enter two different categories. One of the things we love doing is awards. We've written lots and lots of award submissions for finance and property professionals. And I've also been a judge in awards, so it's something we're really,
Oh,
really good at.
yeah. Did you have to wear a special wig and gown to be a judge?
Well, funny you should mention the wig thing because one of the things I've been an awards judge for was the Australian Barber Awards.
I'm right. Okay.
Um, but in case anyone's thinking that I'm judging people's hairstyles, I was not. This was about the business of barbering rather than the actual barbering itself. So they called me onto the judging panel because I was having an input into their marketing and judging their marketing rather than their skills with the clippers.
Right. I was going to say, it's did you have to go around and test all of their skills or, but no, it was more about their business, yeah?
Exactly. And some of them had some really impressive marketing. It's interesting when you read people's award submissions and you see what marketing they're doing. There's stuff you can take for your own business. It doesn't matter if you're in a different industry because the fundamentals are the same.
True, true. Okay. All right. So it's everything property, finance, and now barbering you
Yeah,
can help people with.
absolutely. And I hope in future podcasts I have some barbering news rather than just property and finance and economics.
Right. Well, I'm happy to give my opinion about everything and anything. Well, maybe not everything. It's just like, yeah, I might have to draw the line at barbering, but I'll give it a go.
And you have, if I may say, Owen, I'm not trying to flatter you, you have a wonderful head of hair.
Oh,
And
thank you, Nick.
what have
Oh.
you and that wonderful head of hair been up to over the past week?
Well, it's been hard work keeping this hair looking as good as it is. But my work-wise, it's end of month today in our world, which means it's a busy time of the month when everyone wants to get paid. So a lot of preparation for that at the end of last week. But also worked with got introduced to another property management specialist business in the eastern suburbs of Sydney, and they were wanting to focus. They've had a lot of growth over the last number of years, and they now want to start focusing solely wholly on the eastern suburbs. And so they've got a bunch of properties that they manage for clients outside of the eastern suburbs that they now want to outsource to us for management. So that's been something that's been we've been working on for a few weeks to start implementing. And yes, we just worked that out. And yeah, so looking forward to that happening. And that's good for our business, and it's what we help a lot of other licensed agents do as well, to help them outsource their property management to be able to build a rent roll asset. So yeah.
And I know that's something that you and Lee Field do very, very well.
Oh, thank you. Thank you. Yes, we try. We try. But I always think that you can always do better as much as possible, and so we're always trying to improve and provide a point of difference in the industry. So, but let's get into the news, Nick. What have we got this week?
The first story is really, really good news.
Yeah.
Broker market share rises to record 74.1%.
Wow.
More and more home loan customers are using mortgage brokers, with brokers setting another market share record. Mortgage brokers originated 74.1% of all new home loans in the March quarter, while lenders originated 25.9%, according to research by Comparator. Broker market share has skyrocketed in recent years, rising from 69.6% in March 2023 and 52.1% in March 2020. Owen, you're very, very well versed in this world because you yourself used to be a broker. Why are more and more Australians using brokers?
Well, it's simply because of choice and service. And we were talking recently, I think it was in the last week or two, about the Commonwealth Bank coming out with this online only home loan product, which you have to do everything yourself. You have to fit into this nice, small, tight, square box. And if you don't, then too bad, bad luck. And so it's simply because people are sick of being provided with a lack of service from the banks, especially the major banks. And with branches closing, people becoming, they can't face-to-face anyone. So brokers are really filling that hole of providing a good service to borrowers in Australia who want to buy a home or investment property, and they want choice as well. You talk to a broker, and they legally have a duty of care to provide you with the best product in the market available to them, that is most suitable for you as a borrower. You walk into a bank branch and talk to them. Their only mandate is to sell you a product that they can make the most money out of.
We both love brokers, so both of us are happy that their market share is now to a record 74.1%. How high do you think it will go?
Well, way back when I was still a mortgage broker, in the olden days, it's we were thinking about, wow, wouldn't it be great if we hit that 50% mark? Because we were at probably about 35-40%, 10 years ago, in the broker market. So at 74%, it's it seems to be. And looking at these figures that you just quoted a couple of minutes ago, it's rising quite rapidly, isn't it? So 15%, another 16%, we'd be at 90%. So that might be only say 18 months away. So that would be pretty amazing. And I'd like to be a fly on the wall in the CBA CEO's office when that happens.
Well, given that brokers offer much more value than lenders, why wouldn't market share one day reach 100%? Is that realistic?
Oh, I mean, if that did happen, a lot of things would definitely have to change within the bank structures and how they provide a service. But I don't think it will hit 100%. It's 90 for sure, maybe even 95%. But there'll still be some amount of people that go direct. There'll be home loans written in conjunction with commercial lending, which I mean, it would be interesting to look at the stats on commercial lending to see the growth in the commercial broking market. That's something, that's a market which I think is wide open, that a lot more brokers are starting to get into. And it's somewhere where I think the banks have been a bit lazy in securing that market share. And but the banks still write the majority of commercial lending, and a lot of the time there's residential lending that goes along with that. So I think they'll still at least keep a few percentage points in there.
Well, we don't want there to be too much good news on this podcast, so our second story is not as happy as the first
Oh,
one. Inflation rises to 3.6%.
oh yes.
The new inflation figures make for disappointing reading, suggesting that above average inflation is sticking around for longer than originally thought, thereby delaying potential rate cuts from the Reserve Bank. The latest Australian Bureau of Statistics data showed that after inflation appeared to be falling at the end of last year, it's since drifted higher. So in November, inflation was 4.3% year on year. In December, it fell to 3.4%. In January, it was 3.4%. In February, it was 3.4%. But in March, it was 3.5%. And now in April, 3.6%. The Reserve Bank is trying to reduce inflation to its target range of 2 to 3%. Until that happens, or at least until that seems imminent, the Reserve Bank is unlikely to reduce the cash rate. Owen, are you surprised inflation is proving to be so stubborn?
I am a little bit, and it's yeah, it's interesting. Yeah, I mean, we had such a massive drop from November to December, and we're all like, "Hooray! It's we finally broken the back." But it was needing to come down fairly quickly, and but talking out there in the marketplace and talking to people, like even 2 months ago, we were, we were all glad and happy that inflation had come down quite a lot, and we are still hopeful for it to come down some more. But we still weren't hearing about people losing their jobs, or we weren't hearing about businesses going bust because people weren't spending anymore. And even though we don't want those things to happen, and they're not nice things to talk about, um, they're kind of necessary for what we need to happen, unfortunately. And people need to be able to, change what they're doing, and change their behavior. Otherwise, in terms of spending, otherwise inflation just will not come down. So in the last month or so, I have started to hear more of these instances where, and it's been in the news as well. I think it was Telstra cutting a couple of thousand jobs, and other businesses starting to lay off people. And then a lot more cafes and restaurants are starting to come out and say, "Oh, we're starting to hurt now. Not as many people are coming out to eat." Um, and even though we don't want that to last for too long, we do need it to happen so that it takes the pressure off inflation. Even though the major pushes on keeping inflation high aren't related to necessarily those things of people eating out and so on, it's still a contributor, and it's what we start to hear, and then maybe people in these other areas might be more conservative, that are having the bigger impacts on inflation. So yeah.
It'll be interesting to see where we go from here in terms of the cash rate. Many economists think that the cash rate has peaked. Some think there might be one more rate rise to come, but the economist Warren Hogan has forecast that the RBA will raise the cash rate 3 more times. Does that sound realistic to you?
Not sure if it's realistic, but it's don't even think it's probable, but it could be possible.
Hmm.
If we keep on, floating around here at the mid threes stubbornly for another couple of months, then they might see the opportunity to, in the last 3 months of the year where they do make decisions on rate rises, to make some increases. So it really will come down to what happens in the next couple of months.
Have you given up hope of a 2024 rate cut?
I think so. Yeah. It's we really do need to have inflation come down. One of the major contributing factors is higher rents. So it's unfortunately, due to the lack of supply in the marketplace for rental properties, we can't really see that stopping at this point in time.
Our final story today, Owen, very different subject. Green homes attracting big price premium. Homes with sustainability features attract more buyer interest and sell for higher prices compared to non-green homes, according to Domain Analysis. Energy efficient houses attract 16.7% more listing views and sell for 14.5% more than non-efficient houses, while energy efficient units attract 6.6% more views and sell for 11.7% more. Domain was able to identify this advantage for energy efficient homes by scouring listings for relevant keywords such as solar, north facing, double glazed, and sustainable. So clearly buyers care about energy efficiency. I'm curious though, Owen, what about tenants?
It's if we were in a marketplace where we had plenty of choice, yeah, we would probably see the same sort of preferences and focus. Unfortunately, we're not in a position where people can pick and choose as a result on those factors. I'd love it to be, and I think we need to become more efficient in our homes. It's something that we can control, rather than pointing the finger at everyone else to fix the problem. It's yes, let's fix our own homes and what we're doing in our own backyards, rather than putting the problem on someone else as their responsibility, such as the government or big business.
So to remind you of those stats that I quoted earlier, energy efficient houses are selling for 14.5% more and units for 11.7% more. Why do you think buyers are willing to pay more for energy efficient homes?
Oh, it's definitely where the market is going. People want to, if they've got that choice, they would rather spend the money where they can borrow against what against the costs of the property they're purchasing. So they can borrow easily up to 80% of it or even more with lender's mortgage insurance. And if that means it's going to cut down the cost of their ongoing heating and cooling costs, and if they have, and if there's if they have solar there with batteries installed, which means that they can cut down their energy use, electricity use. If they have an EV car that they need to charge, then it means that they don't have to spend that extra money to install batteries or solar for charging their EV car. Then yeah, why wouldn't you pay extra for it?
Makes sense to me. Well, that's our news for this week, Aaron. 3 very, very different stories, and always enjoy hearing your views.
Thank you, Nick. It's always good to get variety in the news and things that attract the market and affect the market. So thanks for bringing the news yet again.
And see you next week.
See you next week. Thanks, Nick.